when we see headlines like that, as an investor, it impacts current things that I have, but it doesn't necessarily change our strategy. You need to pay attention and need to be aware, and maybe your strategy timeline changes. Thinking as someone who buys apartments, I don't necessarily change my strategy. Either it pencils or it doesn't.
Welcome into the Get Invested podcast, a podcast about all things real estate and real estate investing, brought to you by Capital Velocity Investments and a part of the Matthias Talks Investing Substack. Hello, everybody. Welcome into another episode of the Get Invested podcast with your host, Jordan and Matthias. As always, we're pumped to be here to talk all things investing, real estate, and real estate investing. Today's is going to be way more in the all things category, Matthias. It's more the all things investing than it is the real estate or the real estate investing. We're going to keep it a little bit broader, have a conversation about broader market trends, the types of things that you may see, in the news. You're watching CNBC or one of those and it pops up, or you're reading the Wall Street Journal or something, and there's these conversations or articles about kind of broad trends, maybe the whole nation or a region, or just, hey, this is happening and it's affecting this aspect of the market. Those kinds of trends become news. What do those really mean for maybe the investor as an entity? And also a little bit, we're going to talk about how it might affect multifamily. We're going to bring it in at the end and narrow it down. Now, I'm going to throw it to you, Matthias, but the one thing I want to just say is the example that gave me this idea in the first place was a few things about U.S. population. The specific one was that people are moving out of the Sun Belt. There's an influx to the Midwest, but they're not moving back to cities. It's the surrounding areas, almost, dare I say, the tertiary markets. That maybe set that up for a callback later. But yeah, so that's what we're going to get into today. But
yeah, we were talking a little bit about it before we hit record, but when you hear, we invest in the Sun Belt, right? That's us. I live in the Sun Belt most of the time. We were making the joke earlier that Florida's part of the Sun Belt, and Florida's the part of the belt that you used to, back in the day, we would tuck ours, like the excess on your coiled belt that you would just tuck into your,
the 90s
tuck or whatever.
In.
Which is interesting, but and that brings up kind of, what does that even mean? Do we know? Who knows? Who here can clearly define what exactly the Sun Belt is? Generally understood, it's basically from Arizona to Georgia, we would say, but it's hard to determine what that means, especially when we're talking broad regions and kind of blurrily described broad regions. So off the face, you'd be like, oh no, we got to quit investing in the Sun Belt. There, people are moving out, and absent any other inputs, you're like, this is scary. But then, for that specific one, I would say, where are they leaving and where are they moving to? And what are they looking for? And why are they leaving? More importantly, if they're leaving because so many people moved in that the cost of living that attracted everybody is no longer as attractive, they're finding other places that have lower cost of living, maybe the tertiary markets in the Midwest that are near, your Kansas Cities, your Indianapolis, your places like that, to where that would be my Matthias's initial take on seeing a headline like that, just being a little bit more dug in, I would say, into those type of markets. But either way, realistically, we've talked about it before, but for instance, we invest in Mississippi. You got to zoom in way more when you're talking real estate investing, and we'll probably get back to it later. But off the top of my head, it's just funny that type of headline, like if one of our investors who's invested with us in Mississippi saw that headline and went, "Oh no, we're doomed." It's just, you also got to think second, third order effects down the line. What really are we talking about? How would that potentially impact? We also talked about, okay, Iran, there's a war in Iran, the Strait of Hormuz is closed, or there's a blockade, whatever you want to call it. Oil prices going up because of it. Does that impact us directly? Does it not? These are some of the broader trends that we want to talk about, how they do or do not, may or may not in the long run impact investing in general, or how it impacts investing in general and our specific type as you narrow it down.
Yeah, I think the goal is to talk about it generally, but we're probably going to end up using a lot of examples from our specific niche that hopefully can apply to people that aren't thinking about it, applying it in those areas, but it could still be translatable, I suppose. I guess an example of that would be, for instance, Strait of Hormuz. gas prices. Of course, oil prices going up by the barrel, then fuel costs going up is a broad-based effect because so much of the economy relies on purchasing fuel to drive things. Factories, energy, stores, trucks, transit.
And even shipping in general, just goods
Yeah.
and trades around the world. If oil is more expensive, it
Yeah.
costs more to put it on a boat from China to wherever or what have you. Sure.
Right. Yeah. From the production of the item to the packing of it to the putting it on a ship to taking it to somewhere, all of it goes up. But if you wanted to think about that as far as, okay, putting aside that whether it's short term or long term, because of course that does matter, but let's just say it's going to be long enough to affect things, but not, I don't know, forever.
It's not a permanent.
Yeah. For us, for instance, this is kind of an example of what I was trying to get at. It would be, well, this means that we're going to need to build in probably a little bit more, expect higher prices, a little bit more CapEx or funding or however you want to categorize it, depending on where we're at, for renovations, construction, those things. But then outside of that, it would have less of an effect on our considerations for a multifamily acquisition. And so that's one example where if we move to, say, the world of stocks, because we like, those are our two things that we like to jump back and forth between. Maybe if you got a lot of pharmaceutical stocks, it's going to affect that very differently than it is going to affect a trucking company stock.
Yeah.
Or
an energy company.
Company. Or, I mean, say if you've got stock in oil right now, that's a good thing. But
I got a barrel outside in the backyard of my house, so I'm looking pretty good these days.
Yeah. Just waiting for it
hits 110, I'm selling.
Peak. Yeah. Yeah, exactly. So all that to say, we are not going to be using lots of data or stats because what we're really trying to discuss is that type of occurrence or news.
Maybe even the thought process that we go through trying to distill down to what its impact actually
what will it really mean? Yeah, because we're going to go ahead and say that, we see some report comes out. The report is probably as accurate as a report of that size can be, because obviously there's all kinds of things holding. We believe the report, but what does that actually mean in the thought process of going through it? Absolutely. I think that's the best way to put it. But just how do we take that information in and process and move forward? And I think the one last thing I'll throw out there just as a frame of thoughts before I turn it back over to you is, we were talking about this before too. There's 3 buckets of these types of things. Yeah. And all of them are going to happen and all of them are going to affect things differently. So there's like government only things where it's like tax legislation, local policy, those kind of things.
Sure.
And then you got the interactions between market and government, interest, inflation, kind of things where economy and government policy interact. And then you have, not that there's any kind of pure just market, obviously, but the things that people deciding to move to different cities.
How people react to those other 2 inputs.
Exactly, yeah. And then reports about the 3 of them and what we assessed.
Yeah, exactly. And how one report can impact what happens,
Exactly.
There's all that too. Yeah, so starting off, let's say overall economy, where government and market interact. So we're talking interest rates. Price of goods. So we got inflation rates, but we also, just like energy costs, we'll just call it energy costs in general. Obviously, those impact the cost of goods, but they also impact the household. If it goes up across the board, then that's just less spending power for your, for us and the industry we're in, the tenants, right? So every as inflation goes up, everything else being equal, they can afford less and less rent, right? If everything else is getting more expensive. Well, it turns out rent also goes up because of all the other costs go up. All these things are intertwined. For a second, I made the point earlier before we hit record that interest rates are a variable that everybody is tied to. Interest rates in Charlotte are the same as they are in Flagstaff, Arizona. Individual things in the markets there are changing, but in general, your interest rate isn't going to change much. It's it's going off the 5-year, 10-year, 30-year Treasury, all that stuff. So it's a variable and it's a plug-in to your matrices, but you can almost I don't want to say ignore, but you can almost remove it. It's less of a variable, more of a given because it's the same everywhere. You're not making investment decisions between properties based on interest rate because it's going to be the same interest rate between these two investments. They're general and they're overarching. So yes, we care about how that's going to impact anything we own or anything we're looking to buy, but it's so universal across the board that it's everybody's going to have to deal with it at the same time, I guess. So there's no way to get an advantage. There's no disadvantage. There's no advantage. It just is when it comes to something like interest rates. And so we take the news of interest rates going up as frustrating, but it goes up for everybody at the same time. So whatever dynamics are happening in the market are again, it is what it is at that point, I guess. I'm not sure if that makes perfect sense.
I'll take a swing at it here. What I'm hearing you say, what I think you're getting at, say we're in the market to buy, we're trying to buy a property.
Mhm.
Well, because that would be the most immediate effect of an interest rate. Well, everyone who's trying to buy a property, including the one that we are also trying to buy, are also dealing with that interest rate.
Right.
And there's a good chance that because the interest rate is so high, I mean, that's kind of the scenario we're talking about, right? If interest rates go up, right? It's going to slow some things and it's going to bring prices down, as we've seen in the last 2 years, 3 years. Prices are going to come down. Cap rates are going up, right? And so there's no advantage that you can get against someone else trying to buy it. The only advantage you have is in the way you approach purchasing the particular property in this environment. And if it works, if it pencils,
then do it. But if it doesn't, then we don't.
Yeah.
And everybody has the same criteria. So that is the point I was making. Obviously, it impacts. Like, so if we own a bunch of properties that are worth XYZ amount of dollars, and then interest rates shoot up, now all the properties we own are theoretically worth less because interest rates are up and the purchasing power of any prospective buyer has been eroded. So yes, it does matter. But when we see headlines like that, in the terms of as an investor, it impacts current things that I have, but it doesn't necessarily change our strategy. Let me put it that way. It won't change the strategy because it's across the board. If in the Midwest they're using the same interest rates we are down here in Florida and so on. So I think that's my general point, is that no need to adapt strategy. You need to pay attention and need to be aware, and maybe your strategy timeline changes, waiting for interest rates to change, or you opt for longer term debt so that you can ride out any interest rate fluctuations. Maybe something like that, I suppose. Thinking as someone who buys apartments, I don't necessarily change my strategy. Either it pencils, like you said, or it doesn't. So I don't need to change anything particularly about what I do. I may never be able to buy anything, which has happened. We went 2 years without buying a property because nothing penciled. I guess changing strategy based on something that is a market given at any given time is probably not a good call, in my opinion.
Right. And the flip side of that is also what we're seeing, both near and far. I'll just leave it there, where people kind of banked on something continuing at a historical extreme. And
lots of people did, unfortunately.
Yeah. And so I think, because I know in my own mind, us having this conversation about interest rates, I'm like, well, we've had very different conversations about interest rates. And if there's people out there, of the 5 people who actually listen to this regularly, they'd be like, wait a second, we've heard a lot of conversations about how, like, you really do need to pay attention to interest rates. And this
Matthias is saying, don't worry about it.
So the distinction here is, if something only works in a moment of time with a particular anomalous scenario, and you are projecting that you're going to be able to keep that going 6, 7, 8 years beyond the terms of the current situation, those are expiring, then yes, there's going to be a lot of people recently to whom the interest rate spike has been, let's just say, much more newsworthy than
exceptionally impactful.
Yeah,
I agree with that. I think we beat the interest rate by, but inflation is a similar one. Like the cost of goods, it does vary by region much more than interest rates do. But so when inflation, like for instance, when energy and oil prices are up, it's harder, just like we said, to ship goods around, where depending on where they're created or manufactured or what, depending on whatever it is. But that does have a little bit more play when you talk like a broader economy. It's like, hey, where exactly are they producing XYZ thing that quartz countertops, or making stuff up, but where can we get those from, and can we cut down on costs by transporting them shorter distances, things like that.
Right. That just on like as a broad note of goods in general, and if the price of oils go up, obviously very much affects it. But even if it's stable, I think there's a interesting misconception that cities expensive, out in the country cheap, and it's like for some things,
Yes,
but
that's true.
if you live like my mom's family lives in, they don't listen to this, but if they did, I'm sorry, the middle of nowhere, right? I mean, it is a 35-minute drive one way to a Walmart
To find
grocery
another
store.
person.
Sometimes, this is out there in farm country. And for that reason, because they're not near any hubs or where things are coming through or being shipped, it costs more for things to be out there, to be available.
Right.
And if you're like, well, I'm out in the middle of nowhere where
everything should be cheap.
That's not necessarily the case. I remember when I moved to Baton Rouge, and because it's kind of in an extreme point of the country, right? It's all the way down, and there's only so many things that Louisiana does. It's pretty far away from everything else, unless it comes through the port of New Orleans, right? There were a lot of just like kind of groceries and household things that were, milk is the one I really remember. It was like $7 a gallon or something back in like 2010. I was like, I had sticker shock. I was like, where did this come from? Yeah. So same thing. It was
interesting. Yeah.
Yeah. There was a lot of things that were more expensive there that weren't.
Now, but your gas was probably pretty cheap.
Gas is fine. Gas is fine. Not only are there the refineries, but the taxes on gas are low. Of course, the roads are terrible, but yeah. So that calculation, I guess, I think geography,
the misconception exists.
Inflation, right? There's two things. One, where you are often has way more to do with how much the price is than the inflation. Although the inflation will affect everywhere, it may or may not be that big of a deal. But yeah, being way far away out from things is not necessarily cheaper. I mean, you can buy land for cheap, but
that's fair. Plenty of that around.
So I just wanted to. I mean,
I think it's a perfect illustration of what we're talking about. Is like, hey, what are we doing? Lumber? Are we doing big renovations? Are we doing flooring? Bringing it back to our little microcosm of multifamily, I think it very much matters, and it's hard to gauge the impact without talking to. That's why just a sidebar here. This is why having a network is so important. Like I have contractors who do apartment renovations that I can literally just call up and say, hey, if I saw, a headline that, Suriname is no longer exporting I'm just making this up again, is no longer exporting, there's a tariff or something on whatever. I'd call him up and say, hey, does this matter to apartment investors? And if so, how? And he would be able to explain it. And same with, local, I could call a property manager in a certain market and go, hey, are we seeing labor costs go up because of this, that, or the other, or any different number of things? Having that network to gauge, because it's impossible for one person to know the exact impact. If you did, I suppose you'd be the best investor of all time, but it's impossible to know the impact of everything yourself. So having that network of trusted, knowledgeable people is pretty sweet. And I'm always building that network too, finding more and more people in industries and things that are ancillary that I never really considered, but once you run into it, you go, hey, man, it would have been nice to know this, or, oh, I'm so glad I know this now, dealing with it. So that, as a sidebar, just network is very important of professional, knowledgeable people when dealing with broader economic and or
when trying to drill down for how something that's
impact.
Going on, how is that going to affect you personally or commercially? Right. And I think it's a pretty good and kind of encapsulation of what I was thinking, because again, I go back to, it was that population shift, demographic shift, which I've always find those fascinating, but they're good reads. But I was thinking about it because it was pertinent to my life because there's been a lot of influx into Charlotte, and it's a lot going on, and all the things that kind of come along with that, housing and otherwise. So to hear that it actually had decreased was eyebrow raising. And then I try to figure out exactly what does that mean. Are we talking about the broader metropolitan area, right? Are people willing to move an hour and a half away to buy that cheap house because they can do 3 days remote and then they'll drive in, and they're no longer in the metro area. Yeah, okay. So the Sunbelt, like you said, the Sunbelt, people are moving out. It's no longer the quote unquote hot spot, pun intended, I guess. First of all, yes, as you mentioned, sometimes North Carolina is lumped in the Sunbelt, sometimes it's not. I guess some people just have really wide belts. I don't know, but
depends on what's going on in Paris.
Yeah, but how does that? Even if, let's just take the scenario of even if it is actually true that, and we'll just call the Sunbelt basically Phoenix to Myrtle Beach, right? So, and then North Carolina is going to be Mid-Atlantic. Let's call it Mid-Atlantic, but it gets lumped in because Charlotte's one of the big cities down here, which is why. So maybe we'll just include it, whatever. Charlotte on down, all the way over to California, because apparently California is not Sunbelt. It's special. It's its own thing.
Yeah, it's coastal.
Yeah.
Cut off, but only on the west. Doesn't cut off on the east. Who knows?
I don't know. Yeah. Even if that is the case, like, let me just put it to you this way. Investor says, oh man, there's a 2% population decrease across the board of the Sunbelt. And we both agree on the geographical boundaries of the Sunbelt. And we know that
and understand
our investment are definitely in the Sunbelt.
Fall within the boundaries.
Yeah. Like what would your response be? I guess is one way to put it, because I mean, I know, but you just, I'm that investor.
Yeah. My response would be there's plenty of, I go back to the Mississippi example a lot, because Mississippi as a state has had a negative population growth for the past 10 years. Overall, it's very small, but any place that is not growing, gives you a pause. However, the markets that we invest in within Mississippi are growing at double-digit paces for the past 10 years, which tells me that, hey, there's probably a lot of rural, and this is what happened in the Rust Belt back in the day, is that as towns lose manufacturing, whatever the anchor of that small rural town is, usually it's the rural towns that are dying, or the smaller markets, the ones that for whatever reason their industry died, or they were unable to attract more business in, or whatever, that people are leaving that town. But when I hear that, like when you told me about that headline, to me, I'm thinking, well, that's the people in the interior of Mississippi deciding that some markets in Mississippi that they've been moving to aren't as attractive as somewhere in the Midwest. And we don't know what that, and I'm just using Mississippi here, but like, and so that's happening throughout all. Georgia's doing the same thing in terms of, in Alabama, in the terms of some areas are really kind of eroding and decaying, and other places are just bustling and bursting at the seams. There's a very big dichotomy as you zoom in and divide between the two. There's some places that are absolutely, dwindling, and those people may not be choosing to go to other Sunbelt areas or more attractive Sunbelt areas. Maybe the bloom is off the rose, as it were. Like, the Sunbelt got very expensive. Now rents are decreasing across the Sunbelt now because there was so much supply, because so many people were moving there all at once. It's just a natural cycle. So like, people move out, rents are following as people move out, and it's always rear looking trends, so you can't tell a trend has happened until after it has happened. You know what I mean? So this just happened is kind of what they're saying. So I would argue that as the rents shot up with everybody moving in, some people stopped going to those places and started going somewhere else. The natural, what was happening before the Sun Belt became the most popular place to move to for a few years there, like during COVID times or whatever, those people that were naturally just collapsing to the growing city centers are now, choosing to go somewhere else outside of the Sun Belt, because they were moving for cost of living and opportunity. But hey, cost of living and opportunity is great in the Midwest now too. That would be my description. I would just point to the demographics of where we're specifically investing and say that we're not seeing that here. That's why we're investing here, is because we're not seeing that type of demographic trend here.
Right. The drill down of a very specific locality.
Hyper local kind of.
Yeah. And that kind of example can even be a little bit looser, and it still holds true, right? It still kind of, I guess, attenuates, if you will, the statistical impact of what we're seeing. Because, for instance, I'll go back to like Charlotte losing population. Well, Charlotte's right very close to the border of South Carolina.
So it expands.
I used to live like a half mile above it. Rachel crosses into South Carolina driving to her North Carolina public school. So from her North Carolina home. And I have a bunch of teacher friends who live in South Carolina. So that was kind of thing, like right below the border, and it was called Indian Land and Lancaster County and all that. It is blowing up. They won't, there's just so much building, all kinds of things. I mean, everything from Costco's to apartments to neighborhoods, everything. But yeah, even though it's in a lot of ways an expansion of Charlotte, they definitely can't claim growth in a different state.
Yeah. Charlotte, North Carolina owns hundreds of thousands of people in South Carolina.
Yeah. So that's that moment where it's like, well, I don't know if that really is accurate from what I'm seeing, but it is interesting to note. I think it makes sense for everyone to think through it. Like, yeah, I guess a state easily could go down, but population centers could grow because, say, take Mississippi, for example. Well, depending on how the Sun Belt is, again, defined, Memphis is right there. Nashville is right there, right? Indiana's not that far away, right? So that's not actually that big of a move, right? You got
to draw that line somewhere. So yeah. It could be a 15-mile move, but you moved out of the Sun Belt.
Well, or just a lot of people, I don't remember exactly what the stat is, but there is a stat that says that people will move around, but a much smaller percentage of people are like, okay, I'm going to move from here to 1,500, 2,000, 2,500 miles away. It's way more within like 8 hours or 6 hours.
Yeah, anecdotally, we have a whole bunch of people that live in Destin, Florida that were, hey, man, I grew up in Atlanta or I grew up in Birmingham. You know what I mean? Like regionally, it's 3-hour drive to where they're 3-4 hour, whatever. But from where they're from, and they kind of move around. Like, hey, we were in Auburn, Alabama for a while. Now we're, over in, then we did some time in Pensacola. Now we're here in Destin, a couple 100 miles all around, but not a huge change in terms of the move around. Anecdotally, that's very true. We got to.
And if you live in northern Mississippi, that drive could have been to St. Louis.
Yeah.
Rather than down to the coast, and it'd be about
100%.
So I don't know, that's
Nashville. Yeah, same. Yep.
Right. Well, I was trying to get definitely into the Midwest.
Into the Midwest. I got you. Cincinnati.
That's. Or I mean, Indianapolis is not that much further. It's
that's true.
Straight up. Yeah. So that's just an example of, you don't even have to drill all the way down to local. It's just kind of more of a, let me make sure I have an accurate picture of the terms that are being described, even if we all understood what the Sun Belt meant.
I like how we're just beating up. Whoever came up with that term is just getting.
I mean, give it the broadest definition you can, which is basically the southern half of the United States, and you can still be in the Midwest from it in not that long of a time, right? So,
a couple-hour drive.
It's an interesting. For instance, this was a funny thing earlier. Again, before we hit record, I pointed out to Matthias that the northern border of Arizona is actually further north than the northern border of North Carolina,
which is
like, what?
Interesting. I did not know that. If you just get a ruler on my little map, be like, wow.
I guess the more of the just nerdy academic in me, he was like, oh, let me just look at it. Like, oh, look, did you know? I always thought it was this, because all of us get pictures in our heads of like maps and regions and stuff. So anyway, that's a little bit of an aside, but.
Something else that's always interesting. I follow a lot of, I want to say industry leaders out, in multifamily and apartments. They always talk about, they kind of distill down whatever the big REITs, the big apartment REITs, whenever they release their reports and outlooks and things like that. He kind of distills it down and say, hey, well, we see rents falling here, climbing here. This legislation is doing this to apartments and so on. I follow a lot of that, but the interesting part is that I have to take so much of it with a grain of salt, because the smallest city that he will mention is far larger than any place I've ever invested. You know what I mean? Like, it's not, that was a bit of an exaggeration, but I'm just saying, because we focus on these secondary, tertiary markets, he'll talk about Denver, he'll talk about Charlotte, he'll talk about Austin, Texas, or Indianapolis or whatever. And we don't go into the city centers where these giant trends that people are tracking, and that's where the biggest properties and the most data is available, right? So like he's distilling the data. That's where the data is in terms of, big swaths of it. So I try to glean what I can. But again, even if he says, rents are falling across the entire Sun Belt, which has been happening for a few quarters now. Actually, it's kind of stopped at this point, but it was last year for sure. I'm like, hey, I'm in the Sun Belt. Rents are falling, but we're increasing our rents across the board. And that's kind of a case in point of how, like, hey, got it, but let's see if there's an actual impact to us or what's causing it. And really, in that specific instance, it's that so much supply was being delivered that it was making rent more affordable because they were building more units. So supply, demand, more supply, demand is absorbed a lot easier, and you don't have rent growth. That's what it is. That's why one of the reasons why we pick our secondary, tertiary markets is because I don't want to attract the supply. I want the big markets that are growing to attract all the supply and the developers. I want to own the limited supply that is in, our markets that we focus on. That's just kind of another way of like, yes, you can pull these big demographic trends, big trends in the business and the marketplace, even in our specific industry, but it doesn't necessarily translate directly to what we're doing wherever we're doing it.
Right. That is I guess that is the beauty and I don't want to say downside. It just is part of the tertiary market is that is not where the most
there's
data
less
can
eyeballs.
be gleaned.
There's less eyeballs.
But there's also just fewer people and things happening. So
less data points. Yeah.
It's less concentrated amount of available data to gather.
Mm-hmm.
And so it's not going to be included in those metro
big reports. And that's a way to gain a competitive advantage, right? Like through knowledge, knowing the individual markets without having somebody report on it all the time, or the big guys who focus on the major industry trends not reporting on Gulfport, Mississippi. Then having some specific knowledge of that area is a way to build a competitive advantage. So that's just one other reason that we like to stay in our markets.
That study did have a stat that was pretty, and if we wanted to take it for what it was, pretty positive for our specific business, was that they're moving back, they being the proverbial those who are moving, are moving back, but they're not moving back to Indianapolis. They're not moving back to St. Louis. They're moving back near.
Yeah. Yep.
Near in a broad sense. They're basically moving back to tertiary markets, which are actually attractive because of all the ways in which, since the pandemic, essentially, work has changed, how you work, how much you have to be in a physical location.
Well, I just think a lot of the realization too is that, we're so interconnected now. You could be a real mover and shaker in Chicago, but you don't have to be in Chicago to do it with all the telecommunication and Zoom and all the different things that you can do now. Connectivity is constant. So you don't have to be in New York City to be doing Wall Street plays,
Right. That's an interesting, not something to talk about today, but that is an interesting idea about the ways in which economic data and housing demographic data could be quite disparate if the trend continues, right? The economy is happening here, but the people live
making and spending the money to live way over here. Yeah, that's interesting. How that some suburb outside of somewhere could be blowing up in terms of the net worth of the people or the income of the people, and it's like, well, where do these people work? And it's like, well,
but there's like no GDP there whatsoever.
Exactly. There's they all work, or they earn their money in New York City, or whatever. Yeah. Turns out they just live here and they don't have to be in New York City to earn it.
Yeah. Thought for some
another day,
future time. Yeah, maybe that seems like something that perhaps we will actually have to have some numbers to talk about to see if it's actually happening, not just over here yammering,
spitballing
off the cuff. Well, if anybody wants to send us a definition of the Sun Belt, a legit one, not just like don't Google it and send us like the first thing. I don't mean like a Wikipedia version. I mean,
although a made up version would be fun. I want to hear how somebody specific. What does the Sun Belt mean to you? Start getting some wacky boundaries there.
Part of me thinks it was definitely outside of the South. There was a Southwest thing, but part of me also thinks it was, how do we say people are moving to the South without saying the South? and
It was
all
a-
the
it
things
was a
that come
darn
along
Yankee.
with the
It was
term.
a darn Yankee who
the
was right.
South.
He's like, I will
Yeah.
not say people are moving to the South.
Or just in general, like, yeah, well, let's just avoid that term and create a new one. It's sunny. All right. Well, with that, we're gonna get out of here. As always, we
Yeah, it was a
appreciate
fun
you guys.
conversation. I don't know
Yeah,
if we
absolutely.
taught anybody anything or ourselves anything, but we had fun. That's what
Yeah,
matters.
it's one of those things. As we wrap up, I'm sure everyone listening does that very move with lots of things,
Mm-hmm.
but it's really hard to do that move, the drill down, the next two second or third effects with everything.
Mm-hmm.
And especially if it's something that perhaps is tied to something very important like your investments.
Sure.
The reaction might be a little bit more immediate or visceral, whatever, and then you got to pull back. Anywho, yeah, love to hear thoughts about any of this. And of course, particularly the boundaries of this mythical place, the Sunbelt. All right. We appreciate you guys hanging out with us, and we hope you come back and hang out with us again next time on another edition of the Get Invested podcast.
See ya.